AS-4 Contingencies and events occurring after the balance sheet date. So, what is contingencies? It is a condition or a situation, the ultimate outcome of which, whether gain or loss, will be known or determined only on the occurrence or non-occurrence of one or more uncertain future event. So, there is a situation, we don't know whether it is a gain or loss because it depends on another uncertain future events. Only when this happens, this can be ascertained. So that is known as contingent event. So how will we treat the contingent events? We will provide for the losses if there is any, and gains we will not recognize. We know the prudence assumption, right? So as per prudence, what will we do? We will provide for losses. If there is an uncertain future event and it is a loss, the possibility of loss, we will provide for the loss. But if there is a possibility of gain, will we provide? No, we will not provide for the gain. Now, what is known as events occurring after the balance sheet date? So, we have seen in the heading itself, we have seen contingencies and events occurring after the balance sheet date. So, what are events occurring after the balance sheet date? Those are significant events, both favorable and unfavorable, between the balance sheet date and date of financial statement approved by the board of directors. So events occurring after the balance sheet date are significant events. It can be either favorable or an unfavorable. It should be significant event and it is occurring between the balance sheet date and date of financial statement approved by the board of directors. Let's see an example. For financial year 21-22, 1st April 21, the financial year is starting, right? And 31st March 22 is a balance sheet date. And let the board of directors approval is on 30th June 22 and the shareholders approval on 1st August 22. So where will the AS-4 will be applied? AS-4 will be applied on events that occur between the balance sheet date and the date of approval by the board of directors. So the events occurring between these two dates where the AS-4 will be applicable. AS-4 will be applicable for events occurring here, that is between the balance sheet date and the date of financial statement approved by board of directors. So in the question they can give an event that occurs between the board of directors approval and shareholders approval. So it has no connection with AS-4. AS-4 is not applicable for events occurring between these two days. AS-4 will be applicable only when the event occurs between the balance sheet date and the date of approval by board of directors. So that is events occurring after the balance sheet date. These events that occur after the balance sheet date can be either adjusting event or non-adjusting event. What are adjusting event? Events which provide further evidence of condition that existed at balance sheet date. Let's see. On 31st March, we have provided a provision for bad debt for A. There is a 10% provision is made on balance sheet date. And 30th June is the board of directors approval date. Now in between 1st May, A become insolvent. So when A become insolvent, we had to provide 100% provision, right? So this A become insolvent. Is this a event that occurs after the balance sheet date? Yes, it's an event occurring after the balance sheet date because it occurs between the balance sheet date and the date of approval by board of directors. So this is a significant event occurring after the balance sheet date. Now, is there any evidence of condition? Is there any evidence that this situation will occur as on the balance sheet date? Yes, there is an evidence. That is why we have provided 10% provision, right? On balance sheet date, we have provided 10% provision on account of A. And there is an evidence of this A become insolvent as on the balance sheet date. So this is an adjusting event. Events which provide further evidence of condition that existed at the balance sheet date. This is an event that occurs provide further evidence of say situation that existed as on the balance sheet date. So it is a adjusting event, and when an adjusting event occur, we have to alter the financial statement. Assets and liabilities have to be altered and a disclosure is needed in the financial statement. So for an adjusting event, we have to alter the financial statement and disclosure is needed in the financial statement. Now, what is the case of non-adjusting event? The opposite of it. Events which are indicative of condition that arose subsequent to the balance sheet date. It is occurring between the balance sheet date and date of approval of the board of directors. So a fire hazard, like a fire hazard. Is there any indicative as on the balance sheet date that a fire hazard will occur on 1st May? No, right. So there is no evidence as on the balance sheet date about this situation. So it is a non-adjusting event. And when a non-adjusting event occurs, since we don't know, we don't need to make any adjustment in the financial statement. But we need to make a disclosure in the report of the approving authority. So for an adjusting event, we have to alter the financial statement and disclose in the financial statement. For non-adjusting event, we do not need to adjust the financial statement, but we have to disclose it in the report of the approving authority. Now let's see some example. Suppose a check is received after the balance sheet date, but it is issued at the date before the balance sheet date. Will it be qualified as an adjusting or a non-adjusting event? What do you think? Check is received after the balance sheet date. Even if it is dated before the balance sheet date, did we receive anything as on the balance sheet date? No, right? So it is a non-adjusting event. Check received after the balance sheet date. Even if it is dated before the balance sheet date, there is no evidence of condition existed as per the balance sheet date. So it is a non-adjusting event. We do not need to alter the financial statement. Now suppose a agreement is in the suppose a dealing is on the negotiation stage, then it is considered as a non-adjusting event. But if the terms and conditions are already agreed, since it is already agreed, it will be a adjusting event. Now dividends declared after the balance sheet date but before the board of directors approval. Dividends are declared after the balance sheet date but before the board of director approval. So it is a AS-4 is applicable here, but will it be an adjusting or a non-adjusting event? Were there any evidence of conditions existed as on balance sheet date? No. So it is a non-adjusting event and it need not be recognized as liability unless the laws or regulation is required. So since it is a non-adjusting event, it is to be disclosed in notes to account. Next condition is going concern assumption considered inappropriate. That is, something happens that going concern assumption is not appropriate in the financial statement. In that case, what will we do? So 1st April, the financial year starts. 31st March, we have prepared, it's the balance sheet date, and on 30th June is the date of approval of board of directors. And on 1st May, a fire occurred. So it is an event occurring after the balance sheet date. So a fire occurred and the entire factory destroyed. When the entire factory destroyed, what will happen? The going concern become inappropriate. And if the going concern is inappropriate, when the going concern is inappropriate, we have to alter the financial statement. We have to prepare it on liquidation basis when the going concern become inappropriate. C. Events occurring after the balance sheet date. If there is evidence of such condition has been existed at the balance sheet date, there was evidence as on balance sheet date, it is an adjusting event and adjustment to the assets and liquidities. The financial statement has to be altered and disclosure in the financial statement is required. When there is no evidence of such condition exists at the balance sheet date, then non-adjusting event, and we do not need to alter the financial statement. Assets and liabilities, alteration not required, but disclosure in the report of the approving authority will be required. Just learn the chart. Now, what are the disclosure requirements as per AS-4? We have to disclose the nature of the event and an estimate of the financial effect. If an estimate cannot be made, a statement that the estimate cannot be made should be given. So the disclosure requirements as per AS-4 is the nature of the event has to be disclosed and the estimate of the financial effect or statement that the estimate cannot be made is necessary. Now AS-4 does not apply to these three things. What are they? obligation under retirement benefit plan, commitments arising from long-term lease contracts, and liability of life insurance and general insurance enterprises arising from policies issued. So, for these three cases, AS-4 is not applicable. There are many other. So, these are the three mentioned in our textbook.